Good afternoon, everyone, and welcome to this afternoon's webinar. My name is Jeff Pabst. I'm LAGERS Education and Outreach Coordinator. Today, what we're going to do is we're going to spend 45 minutes, somewhere in there, with LAGERS Chief Financial Officer, Melissa Rackers. And she's going to go through LAGERS and your audit. So the documentation that LAGERS provides, how to find it, all those things. And she's going to go through and explain those and kind of how to find them and what they are and all those sorts of things. So before we get too far into it, let's cover a couple housekeeping items. The way you're going to be able to ask questions for today's webinar is there's a Q&A box that appeared on your screen. It's at the bottom. And you're going to scroll to the bottom and click on the Q&A. As you have a question that arrives, type them in and I'll see them as they come in. And I'll elevate them to Melissa if there's something that's more for the whole group. If it's something that's more specific to you, that's fine. Go ahead and ask that question as well. And then we'll make sure that we follow up with you after the webinar. So introducing today's speaker, Melissa is LAGERS Chief Financial Officer. She and I actually started on the same day, I think. She's been here for 12 years and has 20 plus years in the finance industry. And she handles all things when it comes to the financial reporting for LAGERS. So I'm going to turn it over to her at this point. But again, if you do have questions, make sure you type those in and I'll elevate them as we need to.
All right, thanks, Jeff. We'll go ahead and get started today. As Jeff mentioned, I'm the CFO here at LAGERS. Our accounting department really consists of two people, myself and Danielle Plasmeyer. So you probably have heard from Danielle if you've requested GASB 68 documentation or questions. First, I want to start off by thanking those of you who had registered early for this webinar and for accommodating my need to reschedule for today. So hopefully that fit in with your calendar as well. So we'll go ahead and get started. The focus of today's webinar isn't so much to get into the weeds of GASB 68, but to touch on some of the common questions and concerns that we've been hearing over the years from yourself and from your auditors. So still by far, the main question we're hearing is, are we ever going to get the reports any sooner? And I know I said this last year, I would love to say yes, but in reality, no, this is definitely the time frame we're going to consistently be working with as long as the GASB 68 reporting standards are the way they are. So, but just to provide a little bit of detail on kind of why the timing is what it is, I thought I'd kind of go through a little summary of kind of how the LAGERS audit works. So we really have three different financial statement audits going on at the same time. If you've looked at our ACFR, you probably have seen reference to the LAGERS staff plan and the LAGERS retiree healthcare plan, because as employees of the LAGERS system, we ourselves are not local government employees, so we cannot participate in the LAGERS system. So the LAGERS Board of Trustees does administer a single employer plan strictly for the LAGERS employees. So that plan also has to be audited. And then we do also have an OPEB plan that gets audited. And those end up getting rolled up into our financial statements. And then we're also having engagement for the schedule of changes in fiduciary net position to ensure the assets that we're reporting to the actuaries for your GASB reporting are accurate. And then we also do a SOC 1 Type 2 report, again, for you as the employers to provide your auditors to help reduce the amount of testing that they have to do on your behalf. So from a timing perspective, we really can't get started on the audit and the financial reporting until really August. We do some things in July, like our fixed asset inventory and some minor things, but really it's August when we kind of hit the ground running on our financial reporting. Part of this is because in the month of July, you as the employer are reporting your June wages to us. So we don't have the 12 months of employer contributions really until the month of July is over and we've done our monthly cutoff process. So it's August before we have contribution information. And one of our first sort of audit functions is sending out contribution confirmations to a select group of employers. So some of you may have received those confirmations from us in the past. And then really the biggest holdup is our investment valuation process. As you can guess, the investment assets are our most material component of our financial statements. And because over half of our assets are not publicly traded, the valuation process really does take a significant amount of time. It's not as simple as, well, the market closed, at this price on into business on June 30th. So this is what your investment values are. With these assets not being publicly traded, it really does take a much longer time to get adequate asset valuation information. So we usually get that information about 45 to 50 days after the close of the fiscal year. And then it takes our investment operations team about 2 weeks to analyze the data and prepare it for our financial reporting purposes. And then Williams Keepers, our audit firm, also does some very substantial audit procedures to ensure that there aren't any material misstatements in any of those asset valuations. So Williams Keepers is our audit firm, and they are usually on staff here at Loggers for final field work beginning of September, usually after that week of Labor Day. They're also doing the audit for the Loggers staff retirement plan, as I mentioned before. And the actuaries are also working on the staff retirement plan valuations and the GASB reporting. So Loggers as an employer is also implementing GASB 68 and GASB 65, like many of you. So our actuaries are working on those valuations as of June 30th. So we typically don't receive those until middle of September. And once we have the asset valuations for investment purposes, and we've paid all of our administrative expenses for the fiscal year, we do a couple of annual processes. So one of those processes is actually taking those investment earnings, net of any investment related fees, and allocating them out to each and every individual employer, as well as every member of the system who makes contributions. And then we also do an investment allocation to two of our pooled funds, the disability fund and the benefit reserve fund, so the fund that all of our retirees are paid out of. So that's an annual process that does affect your net fiduciary net position. And the other annual process we do is allocating all the administrative expenses for the system. And we do that based on headcount. So each employer gets an allocation for the administrative expenses based on your number of active employees and your number of deferred employees over the fiscal year. And then we give an allocation to that benefit reserve fund for all of our retiree headcount. So those two allocations have to be done before we can ever give asset information to the actuaries to begin preparing your GASB accounting schedules. The actuaries are responsible for the liability calculations, but Loggers is responsible for providing all of the asset information. And essentially how that gets done is we basically do, we pull all the data from our Eclipse system by individual employer and by individual valuation group. So what I mean by that is if you're an employer who covers your general department, your police department, your fire department, we're pulling all of that information separately because we're reporting that separately to you for GASB purposes. So we pull all of that data out of Eclipse and essentially put it in Microsoft Excel. And then we have to make sure that data reconciles to our financial statements. And the way some of the data is stored in Eclipse isn't necessarily GAAP accounting. So we do have to make some adjustments to that data once we get it in Excel for any of those entries that we make for full accrual accounting. So that takes a little bit of time on our end to get all of that reconciled and have it prepared for the actuaries to start working on your GASB 68 accounting schedules. So then October is pretty much spent, just kind of preparing the reports, doing our notes to the financial statements, working on the ACFR, and like I mentioned, the actuaries working on those GASB accounting schedules. So we're working with the Williams Keepers, our external auditors, Gabriel Roeder Smith and Company, our actuaries. Our custodian is Northern Trust, and then all of our different investment managers. So like all of you, we do work with several different firms in order to complete the audit and the annual report. So this slide is just a little bit of terminology. Like I said, I'm not going to get into any of this in detail. It's really just a reminder that the actuarial valuation is different than the GASB 68 accounting schedules. We use them for different purposes. One is strictly for funding, one is strictly for accounting. And while some of the terminology is similar, they really aren't the same. We get a lot of emails with questions and we're using the terminology sort of interchangeably with some of the questions, but it's just really a reminder that they really are different. Some of the main differences is the measurement date. Actuarial evaluations are prepared as of the end of February, where the GASB accounting schedules are prepared as of the end of June. The asset methodology is also different. For funding purposes in the actuarial valuation, we're smoothing assets over a 5-year period to reduce some of the volatility with your employer contribution rates. But for GASB purposes, we are using the market value as of the end of June without any smoothing. We also do something a little bit different with our retiree experience. For funding purposes in the actuarial valuations, any active retiree isn't considered a liability to you as the employer. They're really considered a liability of the system. So when you look at your actuarial accrued liability, that doesn't include any liability for your retirees. It really is just your actives and deferreds. But for GASB purposes, we do have to include that retiree group and with your total pension liability. So again, this terminology is similar, but there really are some differences. So you can't really expect to pick up your actuarial evaluation and pick up your accounting schedule and see similar numbers. So deferred inflows and outflows, definitely not part of the GASB 68 reporting that I'm sure you guys love. And again, not going to get into the details of what they are, but just hit on some of the common questions that we get around deferred inflows and outflows. When auditors look at any reports, they like to see consistency from year to year. And this is definitely an area where you're not going to see consistency. While there's not consistency, there is always explanations for why the numbers are what they are. And one of the things the actuaries have to do in order to calculate future liabilities is they have to make assumptions. They don't know what's going to happen in the next year, so they have to make assumptions on what they think will happen. So these assumptions include what they think salary increases will be like at your individual employer, what mortality rates are, what inflation is going to be. So they make these assumptions, but in reality, what happens is very different. So one of the areas you're always going to see a deferred inflow or outflow is the difference between actual and expected experience. Like I said, you will see that every year. It will vary each year. One of the best places to go to get answers for this deferred inflow and outflow is your actuarial evaluation. Anytime you're looking at differences in your GASB reporting that relate to liabilities, the best place to go is your actuarial valuation, because that's really where the liability information is coming from. The measurement date is different. What the actuaries are doing is looking at your actuarial valuation and then doing a roll forward from February to June for those liabilities. So you can see in your actuarial valuation what your average salary was for the reporting period. That's a really good indication of an area that what really happened at your employer was different than what we assumed would happen. But if you ever have questions on what's driving those numbers, email or call the office, because we can get those answers for you. Because like I said, they're not going to be consistent from year to year, but there is always a reason and there's always an explanation for why they are what they are. Another one of the deferred inflows and outflows is changes in assumptions. You won't see that in this year's accounting schedules because we did not adopt any assumption changes with the February 2022 actuarial valuations. You generally will only see this every 5 years. Every 5 years, we do an experience study. We look at what our assumptions were. We look at what we think is going to happen in the future and make adjustments. So like I said, you probably will not see anything in your accounting schedules this year for a change in assumption where you would have last year. We completed our most recent experience study in 2020 and implemented those changes with the 2021 actuarial evaluations. So again, a number you would have seen last year, but that you won't see this year. And then you'll also see a difference between expected and actual experience from investment earnings each year. We assume 7%, but we're assuming that over the long term. We realize it's not realistic to earn a 7% return each and every year. So you'll always see a divert inflow or outflow for the difference between the expected and actual earnings. We do get a lot of questions on the schedule of contributions and the contributions after report. And the main question is because for some of you, the measurement period is different because the measurement period for the contribution related reports is your fiscal year end. So while the GASB 68 accounting schedules are always done July to June, the schedule of contributions is based on your individual fiscal period. So some of you have June 30 year ends, and that's great. So it's the same reporting period, but not all of our employers do. We actually have employers with fiscal year ends every month of the year. So that's usually the main difference, is they're looking at what's in their valuation or what's in their GASB reporting, trying to reconcile payroll, and it's different than what is in your schedule of contributions. The other question we get a lot is on covered payroll and how we came up with that covered payroll number. What the system is really doing is looking at your agency and going and finding all the members from your agency and adding up the wages that are reported to us based on the reporting month. So not the month you told us about the wages, but the month those wages were actually paid. So in the month of July, you're reporting June wages to us. So we consider those wages June reporting month. And the reason we do that is so when we calculate employee benefits, their final average salary is correct when we're looking at the most recent 10 years. So if you're an employer who reports your employees on time and you report your wages accurately and you don't have to go back and make corrections or adjustments, you probably don't see any issues here. But sometimes corrections and adjustments need to be made. A corrected wage, just from a terminology standpoint, is a wage adjustment that you or someone at your employer is making through your statement of account process. So through that normal monthly process. An adjusted wage is a wage that gets corrected here at Loggers because you've called your account analyst, realize you've forgot to report someone, or you weren't including maybe a car allowance as a component of their wage or something like that. And we make adjustments based on the information you provide here at our office. So how these are getting handled with the schedule of contributions is we make that adjustment based on the reporting month that wage should have been reported to us. So you might make an adjustment in the month of November that was for June. Well, we're going to consider that a June reporting month wage, not a November. So even on the scheduled contributions, your 10-year history could change if you come to us at a later date and make a corrected or adjustment wage for a previous fiscal year. We don't keep that 10-year data stagnant. We actually do, every time we run the report, go pull new 10-year data so that we're picking up any corrections or adjusted wages. So I think that sometimes surprises employers and auditors when they look at that 10-year past history and it has changed. But that is why. So there's definitely where we see a lot of questions on wages, and we can always provide that information to you. If you're questioning why the payroll is what it is or why a previous year changed, we can provide that information for you. Another question is the actuarially determined contributions. Why sometimes there's a deficiency between what was reported, so that contribution in relation column to the actuarially determined. Loggers does have what we call an uncapped employer contribution rate, and that is truly the actuarially determined contribution rate. Our statutes only allow us to increase your employer contribution rate by 1% each year unless you've made a benefit change. So we do, in those circumstances where your employer contribution rate really needed to increase maybe 2% or 1.5%, that's what we call your uncapped rate. The rate we really need to charge you, but we can't because our statutes has that limitation. So that is the rate that we use for determining the actuarially determined contribution rate. And if you're in that situation, that information is being provided to you in your actuarial valuation on the same page that we're telling you what your future contribution rates are going to be for the next fiscal year. Down in the verbiage, we are disclosing what that uncapped rate is. And again, the contribution in relation is your employer contribution rate that we're asking you to use for funding purposes. So next I'm going to get into the census data. The auditors are definitely taking a look at the census data now because, prior to GASB 68, loggers didn't provide you, the employer, with the actual census data that we're gathering to send to our actuaries each year for valuation purposes. So I actually think this is one of the really great things about GASB 68 is we're giving you this data now, and your auditors are looking at it, because this really helps make sure that the information that's getting reported to loggers is accurate. So what our actuaries are using is accurate information. So I have broke these slides out into the three types of census data: the actives, the deferreds, and then the retirees and beneficiaries. So from the active data standpoint, by far the most common question we see is auditors looking at the end pay that's being provided in the census data and comparing it to your payroll records. That is going to be the same unless for some reason for an individual employee, we don't have 12 months of reported wages. And that could be because they were on a leave of absence. They just, started during the year, and so they didn't have a full 12 months. For any reason, we don't have a wage for all 12 months. We're going to annualize those wages. It's not a difficult calculation. We're just taking the total wages reported, dividing it by the number of months that was reported, and multiplying that by 12 to annualize it. So pretty simple. It's just remembering that that's how that end pay is being calculated. The reason that the actuaries are doing that is they're using that end pay to calculate the future year's liability. So they want to try to get a feel of what the actual annual salary is. So like I said, we're making that adjustment anytime we don't have 12 months of reported wages. And there might be a month that a wage was reported, but for whatever reason, it was really only a partial month of wages. So during our data cleansing process with actuarial valuation data, sometimes we throw out a wage because we can tell that it's a partial month wage. And we think that's going to throw off the liability calculation because we know it really wasn't a full month's worth of wages. So maybe you reported a wage that month, but we threw it out from providing that data to the actuaries because it clearly wasn't a full month's worth of wages. The next question, in fact, I just had this question earlier this morning, is on our free 6-month period. Logger statutes allow for someone new to the logger system to not have to make contributions and the employer not make contributions for free 6 months. So that's where the terminology free 6-month period comes from. But that is based on the system as a whole and not the individual employer. So when a person is in their free 6-month period, loggers considers them enrolled, but not active, because we don't want them showing up on your statement of account and that feeding into your employer contribution for that month. So they're in enrolled status, not active status. So those individuals will not show up on your active census data until they're actually active and not enrolled. The question I received today is, this person started at a later date than this other person, but they're on the census data, and the one who started earlier in the year is not, because the individual who had started later in the year had received its free 6-month from a previous logger's employer. And you can always tell if it's someone who's had previous logger's employment from the census data file in that linked agency column. So that's over to the right of the document where they start talking about linked activity. That link means they've worked at another logger's employer. We don't give you any information about that employment, but it is an indicator that, hey, something else is going on with this person besides their service with the particular employer that we're working with. And that feeds into the next question that we hear a lot is service credit doesn't match our employer records. And usually that's because they have other logger service, because we're looking at service credit with the system as a whole and not just with that particular employer. So those are the common questions that we see from the active census data. From the deferred census data, usually it's, well, this person was on the deferred census file last year and they aren't on this year. Why are they coming on and off the report? So to be on the deferred census data file, you have to be vested. You have to have 5 years of service with the LAGERS system, not necessarily one employer. Or you have to be actively working at another LAGERS employer. So maybe someone worked for your system for 2 years. So when they left, they didn't show up on your deferred census file because they aren't vested, so they hadn't actually earned that benefit yet. But then they pop up on the active file of another employer. Well, because they're actively working, then they're going to show up on your deferred file because they're continuing to earn service credit. So you may see people on your deferred file kind of come on and off. And it is based on their vested status and whether or not they're actively working. Or maybe they've been on your deferred for years, but then all of a sudden they drop off. One of the reasons that could happen is they've taken a refund or a lump sum payment from the LAGERS system. So that means they have forfeited their future lifetime benefit. So they're no longer a deferred member. They've taken that one-time payment and forfeited that future benefit. So they no longer have an accrued benefit with the system. You can also see the same individual be on your active or deferred census reports 2 different times if they have 2 different LAGERS IDs. And the reason for this is it's because they have service with multiple valuation groups. So those general, police, fire, and public safety groups. We have to do this within the LAGERS system for that different service because police, fire, and public safety can have different retirement eligibility requirements. So the same person really does receive 2 different LAGERS IDs. And we really are sort of, tracking them in 2 different ways. So they might be on both your active and deferred, or they might be on the active or the deferred, just with 2 different LAGERS IDs. So a retiree group, the main question we see on the retiree census data is the auditors look at the census data file and they annualize that. They look at that annualized monthly benefit column, and they're comparing that to your accounting schedule, the benefit payments number on your accounting schedule, to see if those seem consistent. And sometimes that works. Sometimes there's not enough activity coming on and off the rolls that's making those numbers look inconsistent. But some things can happen where those 2 numbers are not going to be similar. One is timing, because like I mentioned, these census data files are from the valuation process, so they're as of February. So maybe you're a small employer who didn't have any retirees or had very few retirees as of February, but then maybe you had some retire, say in March. And then that's going to affect your benefit payment amount as of June, but they weren't in your census data file. Or it could be because one-time payments were made during the year. So we have 2 different one-time, well, really 3 different one-time payments. One is what we call the partial lump sum payment, or the plus payment. That's a retirement payment option that individual retirees can choose. It's essentially 24 months of payments being made at one lump sum that's made 90 days after the benefit effective date. There's nothing on your census data file that's going to tell you that someone took this payment option. Again, that's something you're going to have to call the LAGERS office to get the information regarding those partial lump sum payments. And then, as I mentioned, refunds and lump sums, if an individual takes those one-time payment options and forfeits their lifetime benefit, that's going to not be on your census data file for your retiree group. So that might be why your annualized monthly benefits looks a little bit different on the census data versus the benefit payments that we're reporting for GASB purposes. Again, a lot of times with these census data questions, you're not going to have the information available to you on the census data file, or even working with your employer within Eclipse, because you're limited to the information you see for the individual employer. You can't see the information from a system as a whole. So if you have census data questions, really the best way to get the answers is to call the loggers office. Let us know what your issue is. And Danielle or myself are happy to kind of dig into those individuals and get you the answers that you need. So what's some of the information that's available on Eclipse? Basically, all the GASB reporting files are available on Eclipse. Your census data, your accounting schedules, the schedule for fiduciary net position, the SOC report, and then your contribution related files. So if you're an individual who has access to Eclipse, you're going to log in, you're going to go to agency details and then profile, and then the tab all the way to the right of the screen is your GASB information. And that's where you're going to be able to find all these GASB reports. They may not get posted all at the same time. Like I said, census data files, we post as soon as the actuaries are done with the valuations. The accounting schedules, we try to get out there again, as soon as we get those from the actuaries, we'll get those posted on Eclipse. The schedule for fiduciary net position and the SOC report happen about a week later. Some of the testing that the auditors have to do on those two reports are based on the accounting schedules. They want to make sure the information that we're putting in the schedule of fiduciary net position matches what the actuaries actually used in your accounting schedules. So because of some of that additional testing, those two reports generally come out about a week after we get the accounting schedules from the actuaries. And then the schedule of contributions and contribution after reports happen after wages are reported to us, and we've had time at the end of the month to do our annual or to do our monthly close process. For actuarial evaluations, you're going to go to agency details and profile, but then you're going to use the valuation reports tab instead of the GASB tab. And this tab is going to include your initial valuation from when you started with the system, any supplemental valuations you've asked us to run for you, and your annual valuations. You can also look at your wage details. So this is where you can, when you're looking at that in pay for an active person, if you want to see what wages were actually reported, you can go and enter the logger's ID or social or, first and last name, whatever's easiest for you to search one of your employees. And it's going to pull up the wage details for the reporting periods that you're looking for. You can export that to Excel if you need to, and then you can, do that annualized wage calculation on your own if you'd like. Of course, Danielle and I are happy to do this for you if you need to, but you do have that information accessible to you should you need it. So if you don't have access to Eclipse and you're wondering how you get access to it, you have to know who your administrative contact is in your office. Loggers considers that administrative contact sort of the gatekeeper at your individual employer for who says can and cannot have access to Eclipse. So if you don't know who that person is, feel free to call Danielle and I. We can look that information up for you and let you know who you need to talk to. But we cannot be directed by just anyone to allow access to Eclipse. It really has to come from that administrative contact, but we're happy to help you get that process started if you aren't someone who has that individual access to Eclipse. Something we also see some of our employers do is they give their auditors access to Eclipse so that they can go in and access this information themselves. That's something that's completely up to you as the individual employer, whether or not you want to do that. They're considered a third-party administrator, so they really sort of only have read-only access. Like they can't go and report a wage. They can't get you into that statement of account process, but they can go and pull their own reports. Then, like I said, it's more of a read-only access. Again, that's optional, but to do that, we have to hear from the administrative contact in order to allow that access. The next two slides is, again, our documentation guide that you've all already seen, and I touched on this a little bit earlier. It's really just, explaining what documents you're receiving for us, what you're using them for, and when you can expect them to be completed. And like for the scheduled contributions and the contribution after, we say 2 months after your fiscal year end, but we really mean the beginning of that second month. Like you said, if you're June 30, you're reporting your wages in July. We do our monthly cutoff process that the end of the third week, and then they're available after that. So your schedule contributions for June 30 fiscal year end is really going to be available at the 1st of August. It's not at the end of August. And these are your audit reports. Again, they generally are available about a week after the GASB 68 accounting schedules, except for the census data is always going to be available by July 1st, because we're required to have those actuarial evaluations to you by July 1st of each year. Some of the documents that are available on our website, because they aren't specific to you, the employer, are our ACFR, our annual ACFR is posted on our website. It's out there now for 2022. Our target investment allocations, we post those on our website instead of having to email them to you individually because they're the same for all employers. That is a piece of information you need for your note disclosures that you can't find anywhere else except for what's posted on the website. We also have our consolidated actuarial evaluation that gives a little bit more detail on what the actuarial assumptions are and the state of the system as a whole. So you have your individual valuation, but we also post our consolidated valuation for the plan as a whole on the website if you're interested in seeing that. Like I said, sometimes that can shed some light on some of the assumptions that are being used for your liability calculations. The screen right now is showing our contact information. You can reach out to Danielle and I individually. Our email addresses on our extensions are there, or you can use the accounting@molagers email address. That goes to both Danielle and I. So if one of us is out, we're both always seeing it. So if I'm out of the office, Danielle's going to know that I'm out of the office and she's going to make sure she responds, as opposed to it being sent to me and, maybe not getting a response to you as soon as you can, because we really do make your requests a priority when we receive those. We understand if you're having audit related questions, you're usually in a time crunch and you need a response right away. So you're much more likely to get a quicker response from the accounting, just because it is going to both Danielle and I. And like I said, we do try to make it a priority to get to those emails right away as they come in. So that was all my prepared comments. Jeff, do we have any questions?
We only had one question about the 6-month period that I'm going to do a little bit of research on. It's
okay.
With the 6 month, but I'm going to follow up with them after the meeting. But other than that, we didn't have any other questions. So,
okay.
So at this point, I guess we'll just go ahead and end the webinar. We appreciate everyone for coming. And this webinar was recorded, and we will be sending out a link to all employer contacts to view it at a later date. So you can send it to your auditor, or you can review it again at another date if you'd like. Okay,
thanks. And of course, like I said, always reach out to Danielle and I with questions, and we'll get you answered. All right. Oh, all right. Thank you all.
Nope, looks like someone.
Oh, we have a question.
Someone sent a question, but then we answered it by saying it will be recorded. So yeah, Patricia, we'll get you a recording. But other than that, thanks a lot, everybody. All right, thank you.